But really, the US dollar was stronger against most other currencies as well, so we will keep that in context. Let's go to Evan Lucas, who's with us this morning from IG. In Melbourne, it is interesting. We chatted to a couple of the overseas guests this morning about that jobs number and the kind of the struggle that everyone had to make sense of it all. It does seem distorted. But what did you think of the way that people dealt with the Australian dollar overnight?
Yeah, two things, and you've already well and truly alluded to it, Brooke, is I think the interesting thing around those jobs number is, yes, even though we got that record print, there was so many very, very interesting statistics around it. They were suggesting that if you had that print and had a look at it, it would mean 6,000 jobs were added for every business day that was in August. Very, very hard to see that have happened. Not only that, there was also sort of quotes out there that were picking out small and sort of regional towns and saying that the amount of part-time jobs added would have been something like Toowoomba, or even something like also somewhere in Bendigo as well, would have been adding the entire population all in 1 month to somewhere like Macca's. So you've got to put that into why so many economists are seeing the jobs added number as fairly rogue. I think the other thing that was very interesting is that there is now no doubt that everybody's waiting for next Thursday. The strength in the US dollar is the key theme, and there is now more and more talk around whether or not, like what we have here in Australia with the RBA saying a period of stable rates, a considerable time is now the two words that everybody's waiting for come Thursday morning for us over here in Australia. If that is there or not, it will therefore increase one thing that I think is a very much likely scenario, which is volatility, and also again the increase in the US dollar. So the fact that we've lost 3 cents in a week, we've also now seen over the last 2 days particularly, it dropped well and truly below 93. It was sitting at 92.9 on Wednesday morning, and we're now basically moved into the 90-cent handle last night. We've ticked up on the open in Asia, but ever so slightly, and there is no reason why you're not going to see the US dollar continue to rally into that meeting, because we now have a situation where the Fed funds rate is going to be debated, it's going to be speculated, it's going to be seeing whether or not, Janet Yellen herself continues to use as dovish language, and all of that. At the moment, the way trading is going suggests that they are going to move to a neutral to maybe a slightly hawkish stance.
This is actually quite an interesting discussion on, whether that US dollar strength is actually reflecting a shift in expectations, or maybe markets are just getting ahead of themselves. Because I was reading one of the investment bank notes this morning saying, look, a shift in expectations would probably be reflected in market pricing on the Fed funds futures and Euro-dollars futures contracts. They really haven't moved much since August. So can we actually make the link to say US dollars up and that's because expectations are shifting? Or is that kind of taking it a stretch too far?
No, that's certainly one way of looking at it. And we also, when you do that, you do need to look at a basket of different metrics to actually sort of get your gauge around that is. That's certainly one to watch, and there's no doubt. The other thing to look in there is that with the Euro one, you've also got to put it into perspective what's going on with the ECB. So you can look very, very easily at central bank differentials, and that is a very, very stark one. You've got Mario Draghi, who is pushing as hard as he can to pull the Euro down, to pull inflation up in the Eurozone, particularly in the periphery. And then you've got somewhere over on the other side of the Atlantic with the Fed, where they are now coming to what is definitely the end of their current easing cycle. You've got to put in perspective the asset purchase program will, and what we see, will end in October. And that's why at the moment there is also that change as well. It's not just about the Fed funds rate. You do have to remember that $25 billion of current asset bond purchasing will finish at the 31st of October, 10 this month, which will happen next Thursday, and then 15 next month. All of that comes into the fact that, again, the US dollar will start to see repatriation. You'll also see less of it in the market, and they're not printing funds anymore. So that's also part of why the strength has finally come. Everybody's been talking about the US dollar, finally doing this, when it was going to happen. Was it supposed to happen at the start of the year? Everybody was surprised that it didn't, because when the asset purchase program was starting to be unwound, they were expecting to happen then, and it just didn't. It held flat. You can see that in all central bankers across the globe talking about it. Glenn Stevens very much alluding to the fact that the US dollar remains fairly benign considering the conditions that are over there. So we are maybe finally seeing the market moving on the fact that no more money printing, Fed funds rate speculation is now going to pick up, and all of that is pushing the euro, the Aussie dollar. You can look at the yen as well, the pound. I mean, the pound at the moment has got the Scottish overlay on it, but it is certainly all in that same idea that the US dollar is going to be the investment case and the strengthening case over the last half of the year and probably early into next year.
Okay, Evan, what about today's session? What do we think? Are we fairly lacklustre given everything you've talked about is kind of into next week? So what do we do with it today, do you think?
Yeah, and unfortunately that's what we're going to see today. I mean, it's such a flat open in terms of what we can see. has been, you know, most of what's going on in the commodity market looks like it's priced in. However, in saying that, trading yesterday was really, really interesting in the fact that we did get a really good start to the day, and then the more and more China came online, the more and more people read into what was going in the underlying economy, we slid away quite rapidly. We've now had 6 out of the last 8 days in the red, and even though we are calling for a flat open and a possible green, I think the week at the moment and the current momentum is unfortunately to the downside. I don't think you've seen the bottom in the material space. I think there's still shaking out happening there, and positioning is happening leading into next week for the fact that you've got to look at it from a developing market side. If you're a developing market, you're likely to see volatility, and you're likely to see probably actually money coming out because repatriation, as I just alluded to, is likely over the next couple of months. So today will be very flat. I think you actually may see us in the red to finish the day. I just think that's the momentum trade and where it's at. Next week, as you already alluded to, is where it's at. Thursday will be very, very important, not just for us here in Asia or in Australia, but across the globe. Sentiment is going to be driven by what happens from the Fed and how the US trading session therefore reacts to what happens on Thursday morning.
Great stuff. Thank you very much, Evan. Appreciate it.
Thanks, Brooke.
And I didn't even raise iron ore with you. That's Evan's wish.